Welcome to our Africa Tech segment. Financial inclusion has been regarded as one of the most critical drivers of economic growth. Some analysts believe this is because access to financial services have so far been proven as a means to empowering people in various ways. Technology has enabled the banking industry provide various means through which financially excluded persons can access financial services, thus serving as an effective tool to bridge the financial inclusion gap. However, despite the strides, more needs to be done in the area of beefing up financial literacy campaigns, such as that individuals not only have access to these financial products and services, but are able to convert them to improving their financial status. Well, we have Dayo Ademola. She's the head of innovation at EFINA organization. She joins us now to speak more on this. Thank you so much for speaking to us, Dayo.
Thank you so much for having me.
Well, just before we go into the nitty-gritties of this, just give us a brief overview of the Nigerian fintech market.
All right, thank you very much. Just to give a little bit more background, I'm the head of innovation at EFINA, which stands for Enhancing Financial Innovation and Access. And we are a donor-funded organization whose primary mission is increasing access to financial services for the Nigerian populace. And part of that work we've been doing recently has been more focused on fintech in Nigeria. So to answer your question more specifically, the Nigerian fintech landscape has been growing. We currently have over 200 fintechs operating in Nigeria. These fintechs are broadly in three categories, so in payments, lending, and savings. So we have about 39% of today's fintechs operating in payments, another 28% in lending, and another 11% in savings. Of particular interest, I think, will be to your viewers is the fact that in the last 3 years, there's been $560 million of direct investment into fintechs in Nigeria. And I'm sure many of us are aware of what some of the big ticket investments in 2019 were. So there was a huge spike in investments in fintech in 2019.
All right, you just mentioned a huge spike in investment. What are the key drivers of fintech revolution and of those investments?
So Nigeria is a particularly interesting market for fintech. I mean, if you're an investor and you're looking at the global map and saying, where would be an interesting place where there's huge potential growth for fintech, Nigeria comes up somewhere near the top of that list. And this is for a couple of reasons, right? So we have a huge population. We have a young population in Nigeria, and we also have a decent proliferation of mobile phones in Nigeria. And our smartphone proliferation continues to grow year on year. So all of those factors mean that Nigeria is a huge market for fintech, and that's why we've seen a lot more activity in the space in recent years.
All right, I also want to ask, how have we as Nigeria, a country, fared in trying to reach, the unbanked, those who are not aware of this innovation?
So if I just give you some statistics on financial inclusion in Nigeria, and one of the primary things we do here in EFINA is to publish a biannual access to finance survey, which comes out every 2 years. So the most recent one we did was in 2018, and we'll be releasing another one this year. So the formally included segment in Nigeria as of 2018 was 48.4 million adults. Now this is looking at approximately 99 million adults who are bankable and above the age of 18 in Nigeria. So we had about 48.4 million adults formally included. So we had maybe about 39 to 40% of those adults actually have a deposit money bank account. So they have accounts with commercial banks. So we're a ways away from our 80% inclusion target, but we have been seeing year-on-year growth, although growth has somewhat slowed in 2018 versus 2016.
All right, and Fintech has made private and alternative lenders popular. But what makes them different from traditional banks?
The first thing is their reach. So new fintech players, they haven't quite gotten to the numbers of sort of what banks are doing, but they're obviously growing by leaps and bounds every day. The first thing is the fact of is their distribution and the fact that Nigerians are able to access these services using their mobile phones. So you're holding your phone in your hand and they're able to lend to you directly via your mobile phone. The second thing as well is this is largely unsecured lending. So this isn't these are not collateralized loans. So more people are able to access these services and these loans. And the third thing is that fewer requirements, so sometimes the requirements and their risk appetite as banks is also comes into play here. So these guys, the new fintechs are able to lend with fewer and less stringent requirements than banks can, and this is why many more people are sort of moving towards seemingly towards lending from fintechs.
All right, then, Dayo Ademola, the head of innovation at the Athena organization. Thank you so much for speaking on Africa Tech.
Thank you so much for having me.
As we end the program today, every year tourists flock to South Africa to have one-on-one encounters with wildlife. Now, the country's Tourism Association is implementing a no-interaction policy effective in June to discourage exploitation of the animals. The development has been chaired by animal welfare activists, but faces opposition from businesses that host activities like cub petting and walking with cheetahs and lions.
South Africa's Tourism Association, SATSA, has issued new guidelines condemning the common practice of breeding big game in captivity for the entertainment of tourists. The move answered a call from animal welfare activists who argue the trivial amusement of one species inflicting untold cruelty on others.
Lions should not have interaction with human beings. They should not be used as props. There's no conservation value in breeding lions in captivity, and there's definitely no educational value in breeding lions in captivity.
Young cubs are often removed from their mothers, causing huge distress to both, and the space available in most closures is far too small to meet their natural roaming instincts, she added.
Lion cubs that are removed from their mothers after just a few days after being born are very distressed initially. They miss their mums and they miss out on very valuable and important nutrition right from day one, basically.
SATSA is calling on animal breeders to end all entertainment involving performing animals and wind up all up-close or tactile interactions with big game, including activities such as walking with predators and riding on elephants that have drawn hundreds of thousands of tourists over the years. The guidelines are non-binding, and the government's tourism department, while welcoming them, has no plans to outlaw animal interactions, which remain a significant pillar of South Africa's tourism sector. At the Johannesburg Lion and Safari Park, a cheetah strides up to third-generation animal trainer Shandor Laurenti and lets him stroke its fur while he throws chunks of meat to the rest of the coalition. At 25 years old, Laurenti has been training wild animals to be docile around tourists for the past 13 years and says he would be devastated if he had to stop because of growing ethical concerns over tourist-animal interactions. Andre Lecoq, who runs the Lion Park on the outskirts of Johannesburg, thinks the guidelines are wrong-headed.
We've got about 250 staff members working here, so if we stop interaction, that means our business will go into liquidation and 250 staff members with their families will be impacted without jobs and loss of income.
In 2016, he briefly stopped offering visitors the option to cuddle lion cubs and to walk with adult lions. But the number of tourists who make up a third of the park's revenues plummeted, and Lecoq reversed his decision.
Well, that's it on the program today and for the week. Thank you so much for watching. I'm Layo Adegoke. Have a lovely weekend.